the differences between re-registration and private membership. This course demonstrates statutory and practical guarantees for your success by applying all three principles and all 5 steps for achieving financial prosperity. As you assimilate these principles and steps, at some point, particularly if you have not previously legally organized other than as a sole proprietorship in your state, you might begin to reason that you could possibly save some expense, duplicate your original business in a tax-free jurisdiction, and open a second checking account using the same tax identification number associated with your original business, and simply not report profits that are lawfully tax-free. However, while such a strategy might seem to reduce cost compared to obtaining and maintaining membership in at least one private, lawfully income tax-free organization, if it does so at all, it does so with significant security risks and likely adverse consequences. Remember that this course is about reducing cost, eliminating risk, and generating a 6-figure annual tax-free income for the rest of your life. Far too great a reward for doing it lawfully and privately, and far too much to lose by cutting corners. Registered with a state or not, an unincorporated sole proprietorship has intrinsic tax advantages and typically walks into various tax risks by legally organizing with a state. Partnerships, LLCs, LLPs, C and S corporations, and even nonprofit and tax-exempt organizations call new attention to each business owner, who is typically expected by tax authorities to file separate annual income tax returns for the business and pay as many as 10 categories of taxation, compared to only 2 for the sole proprietor. The actual language of state and federal law says very little about sole proprietorship taxation. It says little more about taxation of other types of business entities, but standards of practice have developed by which vast amounts of money not required by the actual language of the law are submitted to or otherwise extracted by tax collectors. Such standards have the effect that employees bring home amounts woefully short of their actual earnings, and sole proprietors pay an equally heavy tax whether or not they actually bring home their full net profits. The Secretary of the U.S. Treasury provides income tax forms for all types of taxable organizations and for some non-taxable organizations. Naturally, the Secretary does not provide income tax forms for organizations that are both non-taxable and non-filing. That is, organizations that are not required to pay or to file for income tax. The Secretary, via IRS Publication 1, Your Rights as a Taxpayer, expressly invites taxpayers to determine tax liability from the law and then pay and file for no more than only the correct amount of tax due under the law, or only the amount of tax legally due. Any taxpayer who instead assumes that the law establishes liability for income tax and then files an income tax form is considered to have filed on a voluntary basis, to have made an irrevocable promise to pay, and thereby to have caused the amount of such promise to become legally due. The sad truth is that there is practically nothing you can do to change any of this. However, you can make changes legally by knowingly operating pursuant to law without the same appearance of liability for taxation not required by the actual language of the law. The one thing you can do to claim, invoke, and exercise your constitutional and lawful rights and privileges is deliberately and legally separate revenue and profits from your individual tax identification number without losing control of such revenue and profits. You can accomplish this via private membership in at least one private, lawfully income tax-free, audit-proof organization with a tax identification number not connected to your individual tax identification number. You could try to accomplish this by duplicating your original business in a tax-free jurisdiction, a state that is not your own. If you are operating a sole proprietorship, you could simply re-register your sole proprietorship in the other state using your personal name and also open a second checking account using your personal name and tax identification number. You would also use your business name and employer identification number. your business tax identification number if applicable. If you are otherwise legally organized in your own state, you could simply re-register by reincorporating or reorganizing your original business in the other state, and also open a second checking account using the exact same name and entity type and employer identification number, your business tax identification number. However, such a strategy is not recommended for at least two reasons, each of which centers on the applicable tax identification number. First, such a strategy is neither condoned nor authorized by the government. Neither statutes, nor regulations, nor government instructions, nor standards of practice specifically permit operating the same business under the same tax identification number in two distinct jurisdictions, particularly one taxable and one non-taxable. Second, such a strategy is inextricably linked to your personal tax identification number. Any duplicate of your original business is reportable to the IRS under either your personal tax identification number or the business tax identification number that is linked to your personal tax identification number. While you can control yourself and create a paper trail to separate taxable business in your own state from non-taxable business in the other state, both businesses and both checking accounts use the exact same name and tax identification number, which provides no recognized separation between the two, and thus no basis for reporting only the taxable income generated in your own state and not the non-taxable income generated in the other state. You cannot control the other state, which could disclose to the IRS the fact that you have a registered business in that state. Secretary of the Treasury Internal Revenue Service individual income tax forms require, under penalties of perjury, reporting that is true, correct, and complete. Form 1040. Reporting only some income generated under your personal tax identification number does not meet this requirement. Moreover, not only does attempting to separate taxable and non-taxable income generated under the same tax identification number compromise your efforts to comply with the statutes, regulations, government instructions, and standards of practice, it is likely, particularly if any of the income you generate is reported to the IRS on Form 1099, to result in adverse consequences, namely IRS inquiry, audit, and probably additional taxes, as well as penalties and interest, and even continuous scrutiny. Conversely, legally organizing your own business in the state where you reside and operating in conjunction with membership in at least one private, lawfully income tax-free organization makes use of at least two lawfully separate organizations, each with its own distinct tax identification number, its own basis for determining tax and reporting liability, its own particular tax treatment, and its own paper trail, all compliant with and pursuant to the statutes, regulations, government instructions, and standards of practice. Moreover, this method both accommodates third-party Form 1099 reporting without compromising your efforts and complies with IRS income tax filing requirements. Private membership provides greater privacy, less maintenance, less expense, and no potential for audits, taxes, penalties, or interest relative to profits generated by means of the organization. There is no state-registered, and hence no IRS-registered, connection of the identifying information of the organization and the personal identifying information of yourself or any of the other private members. Accordingly, as is mentioned in the fourth session, it is of little relevance if the other parties to your contracts issue forms to the IRS each year for payments made to the lawfully income tax-free organization. That is, there is no tax impact on the organization or yourself or any of the other private members since the organization has no income tax liability. As is also mentioned in the fourth session, private membership also makes it possible lawfully to reduce or avoid completely the state and federal unemployment taxes and employer's share of Social Security and Medicare taxes corresponding to wages paid. Merely duplicating your original business in a tax-free jurisdiction does not create a tax-free environment, nor does it create the legal means for generating revenue that, by law, is not taxed, even if you apply for a new tax identification number for the new branch of your original business. Nor does using your personal tax identification number for opening a new bank account in the tax-free jurisdiction. But operating through a private, lawfully income tax-free organization with its own tax identification number does. Moreover, each time you apply for a new business tax identification number that is linked to your personal tax identification number, the IRS is aware that you personally are responsible for the new business regardless of the jurisdiction in which it is registered. You might consider that the benefits of re-registering your original business in another state would be the possibilities of doing it yourself and maintaining sole control of and responsibility for the new legal entity, its initial and ongoing organizational costs, its name and privacy of operations, and your personal privacy. Such benefits of duplicating your original business are based on the fact that it would be yours and yours alone. This is similar to owning your own home and being solely responsible for property taxes and repairs and maintenance, although everybody knows you are the owner, where you are, and often even where you work and where you bank. Thus, the need to take extra legal steps to secure and maintain your privacy. The benefits of enrolling in at least one private, lawfully income tax-free, audit-proof organization are based on the fact that it is not yours, but you get to control part of it, providing you even greater privacy and freedom from the burden of maintaining the organization. This is similar to renting your residence, paying a single, consistent amount, and enjoying freedom from the burden of property taxes and repairs and maintenance. And nobody knows you are the tenant. Conversely, with nearly every other conceivable legal entity, your personal identifying information is either registered with the Secretary of State under the legal entity through which you operate, or reported to the IRS each year on a wage statement or a tax return. Whereas your personal tax identification number is irrevocably tied to your organized business, it is never tied to the private, lawfully income tax-free organization. As is mentioned in the third session, it is possible to enjoy all of the benefits of both methods by organizing or purchasing either a new or an existing private, lawfully income tax-free, audit-proof organization and controlling the membership. That is, admitting only those you know and trust for private membership. Private membership is an exercise of your constitutional, lawful rights to privacy, contract, and agency. And properly exercising your private membership has the effect of reducing your personal taxable income by the amount of non-taxable gross revenue generated by the non-taxable entity. Establishing a private, levy-proof business bank account is a further exercise of your constitutional, lawful rights to privacy, contract, and agency. But you cannot get a private, levy-proof business bank account without private membership in a lawfully income tax-free organization. Private membership provides for tax-free personal withdrawals and expenses paid from your private, levy-proof business bank account via its debit card and makes these reductions to your private, levy-proof business bank account balance untraceable to you personally. Creating a sophisticated, private, lawfully income tax-free, audit-proof organization without using the personal identifying information of any of the private members is considerably expensive. Certainly not the same convenient 30-minute online shake-and-bake process of providing personal identifying information to state and federal tax authorities for incorporating and obtaining a new tax identification number. As is mentioned in the third session, business entities and structures with no income tax consequences to the individual can cost tens of thousands of dollars to organize. However, obtaining private membership in such a sophisticated organization is the most private, most secure, least expensive, and therefore most practical method.